Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in Discord? I might be having some problems again there. Do you see my mouse moving? Can you see my screen? Okay, thanks. And how we doing in YouTube, guys? Let me try to fix Discord. Dan, if you're there, I'm still having trouble with this. How about now in Discord? We got it going. Okay, and Discord's good. Thanks, Stephen. Thanks, everybody. Discord changed its interface, and it's been a little problem. But we'll go from there. Good morning, everybody. Welcome to this Traders Lab. I am your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing timeframe. This stream is focused specifically on the business of trading, how the market works, why it does what it does, and how at times you can get in alignment with it using structured trades. Now, the idea of a structured trade, so you understand, this is not a simple plug and play process. There is no such thing in trading because of the random interaction of the participants. What there is in trading is understanding the developing condition of the market and having conditional behaviors that you have defined, which then give you some guidance as far as what specific trades or structured trades might be in alignment with the current developing context. And context is the overall condition of the market. Is it directional? Are shorts being squeezed? Is it rotational? And each of those different configurations, which are constantly developing and changing during the market as the participants interact, that is our challenge as traders. So the simple approach of all you need is this and that, plug this in, and there's an ATM in the basement is just fantasy. And I don't want to be insensitive, but nonsense. So what do we do? If most retail traders are following processes of indicators and timeframes, is that a viable solution? Well, at times it certainly is because we all have winning trades. But at other times, and maybe even most times, we lose with that process in spite of the winners. So what we tend to do, it's just human nature, is say we see patterns, and the human mind is really good at seeing patterns and little lines crossing over in multiple time frames. So we see all of this and we go, I just have to make it better. That's logical. But the answer doesn't lie in making it better. It lies in knowing you have a statistical edge that favors you versus the other participants. So even though you have random winnings, you can still be a loser. And if that's what's been happening to you, and you're always going, well, gee, this works really good. I just want to be ready to catch this thing again next time. But along the way, you don't have a way to define change. And then that what you were doing previously, even during the day, is no longer qualified. You're going to keep doing it. And that's where losses and lack of a statistical edge or alignment with the market takes us from potentially sustainable business model into a losing business model. So that's the idea at Trader Lab, is to help you understand what the business actually is. And of course, past performance is never indicative of future results. Every individual trader is different in this way of how they relate to the market, how they codify the processes. And that's what you need to do if you come to Trader Lab, and also the discipline to actually manage their emotional states. And I've always said, anywhere in the stream here or anywhere else, or even in the Trader Lab community, and there's no cost to be part of the Trader Lab and participate in it, is that the biggest obstacle is going to be your emotional triggers, your fear, your greed, and all the lunacy that goes on because we're emotional beings, fight and flight and all that. I believe if you do the work, you can learn how to trade. You can learn what to do. But doing the work is going to be greater and require more effort on your part than you probably imagine it is. And the reason for that is we're operating in an environment that's 100% random 100% of the time. And being in a fearful state, in an uncertain state, triggers fight and flight. We are not wired to seek risk. We are wired to avoid risk. So that's why we look for confirmation, we look for certainty, and we're in an environment where it doesn't exist. So we're always trying to solve for certainty, right? I mean, who wouldn't? But the problem we're in is that we don't have certainty. We have maybe. So how do you operate in an environment of maybe? Because that's the best you have. Maybe the trade will work, maybe it won't. Well, what's the difference between trades that are successful and trades that aren't? How about it's random? If you can accept randomness, it takes the need to be right, just like the way the casinos operate, and the need to predict and confirm, and removes it because it's not part of what we're doing. And if we can change our approach, if that's appropriate for you, and I'm not saying it is, you have to vet this, to, I don't know, maybe, now we are released from predicting, since we can't, and now our job is alignment with our plan, in alignment with the current condition of the market, because we're only interacting, we have a statistical edge that favors us. I hope that makes sense. That's the basis of the Trader Lab. It's about building out the business side of trading and creating potential sustainability. And like everything in the trading business, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's 60 PDFs of these trades you can download. This is not plug and play. These are template trades, if you will, that you can dissect, and your job is to reverse engineer them. This is not when this shows up, I put the trade on. It requires an understanding of market mechanics and something called context. It takes time to develop that. Also, I want to remind everyone, if you're visiting in YouTube and you haven't verified your Discord email, that's associated with your email address in Discord, that you will not be able to gain access to all the chat rooms other than a general chat in the Bookmap Discord community. Now, if you're in Bookmap Discord community, you're already verified, this does not apply to you. But if you want to become part of Trader Lab community, it's absolutely no cost, but you do need to register, and it's to keep the the bots and the spammers and the rest of it out of the Bookmap server. So if you're using POS, Bookmap, it's free to register, so feel free to take advantage of that, but you will lose access to all the streamers and the special events. And remember, Bookmap holds contests for free subscriptions to Bookmap. There's all kinds of interesting stuff going on, special events. Also, the Bookmap Academy, which is for mentoring, if you will, and coaching using Bookmap, and for the trader development, not to mention the Trader Lab, which I think is something you might want to take advantage of. And there is no cost for Trader Lab. Now, let's go into higher time frame. This is yesterday. Now, I have to take you back to the higher time frame. And the reason is, you guys think in time frames, don't you? Well, I do also, but I think of it a little differently because I'm not using time, I'm using volume. And that's what this volume profile thing is all about, and it's very esoteric. I almost think about, and it's called auction market theory. Auction market theory is basically pricing, and volume really tells us about valuation. And the easy way to think of this is shopping. When you go to the store, wherever the high volume is for a product is a retail price, and buyers and sellers agree to do business. When we were up here, and this orange line is the highest volume in a consolidation, so call it an intermediate time frame, and we break away from it, it's too high. We break out of this is the bottom of the consolidation. From way out here, there's another one of these, high volume. We gap out of the consolidation, which is, look at the language, too high. And now we gap, we test this one, and we reject it. We gap again, and off we go. And now the retail price in this consolidation is right here. So that's support. Now we come up on the tariff pause day, and where do we go? We test this. Too high. I'm not paying that. Get out of here. Come down. And then there's buyers show up here. Who knows? So sell stops are here. We get continuation buying. Sell stops are here. Buying. And where do we go? Right here. We don't quite make it. This day, I'm anticipating squeeze, squeeze, test. And this is last Thursday, Thursday before the long Easter weekend. And we have an inside day. Indecision with a wick. So this sets up, this is like a little triangle. And we break out. So now we break out, and the retail price is now here in this, all this volume. Okay. So back to retail. That's called mean reversion. We come out here. We take the stops out of here. We take the stops out of here. And this is, the day before, several days ago, Monday, as a matter of fact. And the target was here. Missed the target. Sell stops are here. Stops are here. Stops are here. Stops are here. Stops are there. Stops, right? Okay. What do? We come back to the mean reversion. In all fractals and time frames, and you'll see this, how this works in the short time frame, we are always coming back to the price. Now, from your shopping experience, and this is what makes trading, while it's random, if you understand how the market works, and this is what one of the things we focus on in Trader Lab and can help you a lot, is to understand the market's looking for too low, fair. So if you go to the store and your can of tuna's 25 cents, special clearance sale, and you're a tuna lover, you're going to throw 5 of them in the cart. It's on sale. The retail price is here. Buyers and sellers are willing to do business. Fair. You are too. You'll pay $1 a can because that's the fair price. If it's on sale, you throw 10 in the cart, fair price. What happens though, if the market is short and I have buy stops there and there, what can I do? Well, yesterday I get this huge gap, totally abuse the shorts, and where do we go? Look very carefully. There's buy stops there. There's buy stops there. And our target, we had a 5,500 target and stops there. That was the next target. And then here. So this was the trade for the long side yesterday. And as you guys know, and you should review yesterday's stream, 55 was resistance. We had like 3,000 icebergs go off there, and somebody threw a wall after we picked the stops over this high. And then we came back, and that set up shorts. Okay. Now, where do we come? Now, I was looking for this to come back and fill this. So let's go now a little further. I'm going to show you now something interesting. I'm going to break this day down using the daily market profile. So you see, this is what this looks like. Here's what happened yesterday. We had this distribution, the high of the day at 55-ish. It was 54.75. And we had liquidity. If you have order flow tool like Bookmap, you'll see the liquidity. You'll see the icebergs. You'll see somebody drop the kitchen sink on it. And then we came up from here and rotated. And the fair price And this is called a distribution. A distribution of volume. You see how it tapers? Less buyers. And we hit the wall. Down here, less sellers. And this is what we're doing. And this is the retail price, high volume. Remember your can of tuna. I'm not paying that. Yeah, but it's on sale. It doesn't say on sale long. It comes back here. It goes up there. I'm not paying that. And that's called the auction. And then your retail price is 75. Let me just show you. Now, there's two things here. One is, this is the dividing line. In other words, this was too low, and this is called mean reversion. That's called the mean. So it's outside in, and while we're going up, it's longs until we fail. And then for me, it was shorts. And I think if you look at yesterday's stream, I showed you the longs, I showed you the failure, and then it was short. Okay? So for today, I'm looking at the following thing, and this is all posted in Trailer. There's a couple possibilities. If the market is short, we can get a squeeze up to here. And then if this is now too high, we can rotate and come back here. And my goal was to come out the bottom because we have a gap. So that's one part of it. The other part is, if I get through here, my next level is 75. And 75 would also be a short to come back and then fall out the bottom. And if I'm completely upside down, yesterday's high is on the list, and we can take that out. So I have about an 85% probability to take out either yesterday's high or low. Pick one. And as Dirty Harry likes to say, or did say, do you feel lucky? Well, do you? So now, RTH low. Now, here's the thing. Yesterday's low has stops. Yesterday's high has stops. What is it going to be? That's a great question because I don't know. So what I do is I just have a scenario and then I try to get an alignment. And when I don't get an alignment, like you, I take stops. Let's look at this trade. Now, this is the retail price or highest volume from yesterday. This is the overnight volume point of control, the ETH auction, the ETH mid. And initially, I'm looking for a squeeze and to come out yesterday's low. And because there's a gap. So my trade plan, and apparently, I'm looking for the ETH low. I'm looking for settlement. These have high probabilities. And the gap. Okay? And this. So initially, I'm looking for squeeze the weak shorts. So I'm taking shorts. Me. Doesn't mean it's a good plan. It's just the one I came in with. And then I'm looking to come out the bottom. But I also have to be aware, I don't know how high it can go. So there's no prediction. Remember, I can't predict anything. I have no clue. So my first trade, and what I was thinking about was, and I was kind of debating with myself a little bit. I said, should I let the squeeze happen and then get short? Or am I going to get follow through sellers? And do I have the possibility then of coming out here? So my first trade was a short. And I'm leaning against this location here. So RTH open is here, 8:30 Central Time. Let's look. This, and there's two ways to do this. The smart way to do it is this is called a developing volume point of control, and I made up a name for it. This is called the variable high volume node. What it says, now I'm going to talk language. I don't use indicators. By the way, if you have questions, post them in YouTube, and I will do my best, and also in Discord to respond. I don't see your questions while I'm doing this narration. They're on different monitors, so I have to kind of look around. This is the opening swing high. These sellers in here have their buy stops here. And if you're in Trader Lab, if you trade the opening trade, and this is very aggressive, I always suggest to traders don't trade this because it's very easy to take stops because you have no structure. And if these guys are wrong, their stops are going to be right here. Well, what is the possibility? My location is here. My liquidity is there and there. My variable high volume node is here. My opening swing high is here. So there's two possibilities here. If you can take a short here, your stop has to be out there. You can wait for the pick of the stops over this swing. And then if you get absorption, you would then take it back to here. And this is advanced methodology. And in Trader Lab, I always say, no, don't do it. Because it's speedy, you know. So what do I know? Too high, but buy stops. Liquidity, this I'm looking for a test. Let's look at the microstructure. This is called trading in fractals. Let me put a little line here. You can learn this. I'm not saying you want to learn it. I'm not saying you should learn it. This is a structured trade, advanced methodology. Liquidity, buy stops taken out. This is the retail price. We rejected it, and now I'm coming back to test it. Right here, and I have no clue until this. Once I come back in, then where's my resistance? It's here. Where's my entry? Where the sellers took over, right at the VHVN, limit order, stop over here, and then where's my support? It's there. Where's my scale? It's there. And then it's helmet. Watch. Buyers were here. We checked the settlement. There's a high probability of checking the settlement. We checked it. Squeezed, short, target, and the target is for a scale. What's the rationale? If this is too high and this is too low, resistance, support, scale. Then it's what we want here for this trade to work is to get under here and take this out. If I test under here and I can't get below this and I come across, then it's trade management. The trade fails up here. Okay? So far, this trade is still percolating, and I have no clue. I am clueless, not ignorant. Why am I clueless? Because I can't predict anything. Absolutely not. Where's my resistance, you ask? I know you're asking, aren't you? That's my resistance. Where is my support? It's here. Why would this be support, you are asking? Because these sellers were absorbed. Now, this is order flow. Now, I have no idea. Don't think I know. Now, if you do, come to Trader Lab and help me out because I'm still trying to get better. Doesn't matter. I've been doing this going on 46 years. I'm always trying to get better because I'm always like you. I'm going, what's going to happen here? And of course, I can't predict. Well, let's look at what I know. Right here, chop, 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 chop. Sellers are here. Buyers are here. I break low. Sellers are in control. Here, I see my buyer. See the change? So what happened here? These guys were absorbed. I don't know it until hindsight. But here's what else I know. My sellers were there. That's why it went down, right? If I break above the sellers, now this becomes support. And my high volume is, if the sellers were here and the buyers are above the sellers, what does this become? Isn't there this concept that we've all heard that resistance becomes support? So if I pull out, and I don't know, and I had sellers here, don't forget. These guys are absorbed. There's the icebergs, and I have no clue. I need it to get below here. And as far as I know, it's going to zero. When it comes back here, this trade is failing. Okay? So that is a viable short. Now, and I think about it, in hindsight, clarity shows up. Now, this might be too low. I have a low volume node here. And I have a variable high volume node here. We're going to mark this one. So what do we know? Now again, what do I know? I know I'm following the auction and the distribution of the volume. What else do I know? This is a long. And what's this up here? A short. So if what I was doing today, and of course, looking back at it, you always go, I was trading, and I post this in Trader Lab, and I want you to understand, I don't make recommendations. I can be trading shorts, you can be trading long, and everybody has equal opportunity for profit and loss. Doesn't change anything. In hindsight, we can kind of determine maybe the long side was the side, right? Well, I can't tell that until I have more evidence. So resistance, support. So my inclination based on the higher time frame is I'm favoring the short side. So I come in thinking that, and it's just a plan. It doesn't mean anything. That we have shorts in here from yesterday. I know I have 75 as an outside edge up above me, 54.75, I think it was. If I get up there, I'm going to fade it. If I don't get there, I'm going to be selling along the way. So I know this was the fair price from yesterday. If it becomes too high and I'm rejecting it, like I'm not paying that, and I have a VHVN, which is today's, these are components or are pieces of a narrative, and this is why I'm taking shorts. So I wasn't taking any longs. I'm going here to here. But I have a problem, and that's that this is up here. So what I need to happen is for this thing to shift down again and for us to fall out the bottom. That's the plan. And, the way plans work is they're all really good. If I come out here, now I have a problem because now this is too low and this is no longer too low. This was resistance, and resistance, as you know, can become support. This is support. This is support. This is resistance. Take it out. Then it's like, what happened? Watch. This sets up a long or not. Why? Resistance becomes support. Now, where's my next target? ETH high. No, I don't necessarily have to take these. I'm just showing you if you were oriented for longs only, then you'd be looking at the long side. For me, I was fading this. So what that means is I don't just sell. I'm going, well, where's my next location? And this is an area to observe. Where is it? Hope I put it in here. I might not have done that. Hold on. 75. They're not in here. I got to put them in. Sorry. 75. I showed you that earlier. That is a variable high volume node is what I call them. Let me just throw it in here. And that is the level that's very important for me. That if I can, I'm looking to sell it because it was too high yesterday. Doesn't mean it's a good plan. It's good until it's not. And 50 or 49-ish was that LVN that came. Let me just throw this in here. So these are levels for me to observe for potential behavior. And just so you know where they came from. There, resistance separates, and then here is that 75. Okay, so for me, even though I had this thing going, and I'm going, would have been nice, right? Well, I just live with it. I'm going, well, that's my plan. Now the question becomes, should I be long and stop selling? Well, until right now, I'm still okay with taking counter rotation trades, but this is not necessarily what anybody else should do. It's just my plan for the day. And it might not be a very good plan, except it's still working. I just now am looking to fade these longs because of why. I know. And it might be totally out to lunch for today. The reason I'm doing that is because we only got this far. Now, I have an 85% probability to test either this day, yesterday's high or low. And so it makes me uncomfortable, right? But why, if I had 3,000 icebergs up here and we couldn't get through other than picking stops off here, that shows me that we had exhaustion and we still didn't get these stops, which to me is like easy pickings. And here's the logic. I use a conditional statement from when I built trading systems. So conditions, if this, then that, if not, then what? So if we're going up, if this, then that, and this, right? Too high. If not, then what? Then sell. If the market is short, then what? Then potential squeeze. If I get the weak hands out and I can't get back here to get all the shorts out, only the weak ones, then I want to be selling it to revert back. It's called mean reversion, and mean is the underlying statement. And I can definitely be upside down in this thing, but my plan allows me to trade from either side. So for me, my primary bias for the day, based on what has already happened in the higher time frame, is to be a seller. So squeezes, and believe me, when you have a gap like this, heck of a squeeze. Well, if I squeeze and I run out of buyers, then the stops under here are vulnerable in filling this gap. That was my trade for today, and it may not happen, and who knows? So that's my trade. I just want you to understand the rationale. I'm not saying I'm rational. I'm saying that's the trade. So this is the next level, and 75. So 50 is the LVN. Let's watch. Liquidity in the book. Buy sweep, interacts here, selling icebergs, location, and possible. Now, the thing is, I'm above the ETH high. I'm above the volume point of control. This was a potential long. It's not my trade. It could be a long if you have a long bias. It's actually a structured trade. You can learn this in the Trader Lab. So nothing for me to do. I'm just sitting here going, let's watch. Sweep says higher, nothing to do. Now, we have a statistic in the Trader Lab, and it's by 9 a.m., which is right here, and we had a report. If we take out the first hour's high, and you've got to vet everything, there's approximately, I think it's about a 76%-ish probability. Don't quote me on that. I don't have the stats in front of me. We're going to take out the first hour's high. So I know now I have a high probability of coming out here and going to the first hour's high. And that will happen at 9:30 Central Time. So where's my next trade? My next trade is out here. So I have to be conscious that if I come out here, this is a dividing line between those two distributions, and I'm still taking shorts. Me. And again, I'm thinking of going to visit the psychiatrist for this. Look what comes in here. Liquidity, selling icebergs, location, location, location. I took a short. Now, let's look at this. Now, when I say I took a short, this is a short. There's my sweep. This sets up the potential for a counter rotation. My objective with this trade, and this I'm fading. You have to understand, this is counter trend. The direction is up. I'm getting a squeeze. That's my plan. And I'm also saying, the long would have been okay too, right? So this is a short. Now let's watch the location, the liquidity, and this is VPOC migration. This throws a wrench into the short. Why? In the developing daily time frame, this is the new retail price. In the microstructure, Let me open it up so you can see it. This is one of the beauties of order flow and using Bookmap is, how much of this do you want to see? Well, when I'm stalking an entry and a trigger, I want detail. Otherwise, I'm just hanging out here, working on my crochet. But I have location, location, location. It's like real estate. So what do I have going on here? Buyers are here, sellers are here. So sellers are there, buyers are here. Seller gets below the buyer. It's my first hint in this sweep that maybe location, location, liquidity, that I should be looking at a trigger here. There's my trigger. Sellers now took over control. Where were the buyers? They were there. So let's watch. I'm going to draw a little line here for you. So there's my trigger. Here's my pullback. Subject to your plan. Entry is 1 tick under here. Stop is 3 ticks above here or above there. That's your call, not mine. And then the job is to cover the risk from the entry to the stop to get risk neutral. And then you're looking for, to come outside. This is called mean reversion. So it can only come here, come back here and get stuffed, or it can come out here. So if I get through here, I've got all of these little distributions, and these are little auctions. Too high, too low, retail. Too low. Breakout. Rotation. High volume node. These are auctions inside of a developing auction. I call them fractals because these are not created by time, they're created by volume. So if this becomes too high, then I can come down and look for what's too low. And I don't know where it is. I know this is a low volume node. So we can come back here. So this is mean reversion. It's a short. Let's see what it does. Notice the resistance. So in this trade, you'd be short, you'd be risk neutral. This shifts up. This presents a problem for the trade. I want you to know. This is my resistance. This is support, and I need to get under here because this is called mean reversion. What this is the mean. So I'm trading multiple time frames, right? I'm looking for this. But when this shifts up, it's saying what's below me is too low. And then I'm going, because if I come outside and this is a low volume node, this might be too low, I'm going to come back here. If I get out here, I can come back here. So if I get short, I'm doing this until this, and then my teeth start chattering. See? So this trade would be a short, a scale, trouble in River City because of that, shift high, trade fails here. Okay? And I'm above this. 75 becomes my next level. So I know a lot of traders in Trader Lab were taking the longs. Very proud of those guys. And I have a 90% probability of taking out either the first hour's high or low. And because remember, I took this out, I think it was a 67 or a 78% probability. Don't know. Don't quote me. You have to vet these for yourself. I take this out. So the longs are the side that is in alignment at the moment. But I'm looking 75, right? And I'm going to have to go see my psychologist and ask myself why. Because it's my plan. And it doesn't mean it's a good one. It's just my plan. So this is my location for my next trade. Now, this is that 90% probability, but this is my resistance that came from, whoa. See, I want you to see how these pieces might fit together. This. So this was the low volume area, right? There where I was taking shorts, looking for this. No bueno. We pushed through. Next area, 75. Still looking for it, but I have to be very careful about yesterday's high because I have an 85% probability of taking out And that's not 100%. Yesterday's high or low. Well, considering everything, it does look like we're favoring the upside. But if I want to trade counter trend, which I don't know, but I am, I just wait for the locations, put the trades on, and then whatever happens, happens. So what happens here? Location, 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 IB. We have two trades in the Trader Lab. We have the IB continuation trade, which is here. And for me, if I did this trade is okay to 75. So you could take this trade. It's a long in the Trader Lab to 75. What I did, so I could take the long here because it's in alignment to resistance, or I could skip the long and take the short. See, which one? Great question. I don't know the answer. I can tell you for me, this was a short. Because of that, let me show you the trigger. I think the guys on the longs are having a better time. But it doesn't matter, does it? It's just alignment. And am I confident in my plan? Yes. Do I take stops? Yes. Would I like to not take stops? Right. Do the casinos pay the gamblers? Yes. Do they only play games with an edge and accept the random outcome? I'm going to show you micro. I'm going to take you up here into order flow. So when it's coming up here, and this is a long, don't forget, IB continuation trade. This is a nice structured long trade. But because of this, if I take it, I'm only going here. So, for me, this is not worth the trouble. What's worth the trouble for me is to try to get these longs and come out here. So I come up, this is a location. Now there's no precision. So right here, I'm at my location and I'm looking for a trigger. I got this. I need to get below this. I don't get below it. I'm above the sellers. They were absorbed. Buyers are still here. Buyers are here. Buyers are here. Sellers take control here. I'm still in my area. There is no precision. Up in here is microstructure. I'm going to show you micro. Now, I'm getting down into what I call fractals. Now, this is not actionable. It is informational. Location, location. Stops are sitting under the IB. And if I can get under here, I can run over longs. So this is my first suggestion that this is too high. I got buy stops, selling icebergs. Thanks for playing. We're going to send you a coupon to the buffet. Now I'm going to put a little box around this. And this is a little more advanced because you have to train your eye to recognize the language of the auction. And most of us are indicator driven. I understand. Me too in the past. So this was rejected because this was absorption. Now, I don't know it's absorbed until hindsight, so there's no way to know. But as soon as the sellers are below the buyers, and this for me is location, I'm then looking for a trigger, which is this. Now I'm looking for the short. And where might it be? Right here. Right against this and this and this. Outside edge. It's right there. There. So you got micro high volume. I'm not paying that. Remember, shopping. This is your convenience store down the street. A pint of ice cream Saturday night, $8 a pint. Desperados like me who are going to watch the movie might pay it, but most will not shop there and they leave. So if they leave and we come back to the store, this sets up a short. My stop has to be here. Now, risk neutral, and I'm going for this outside edge and the stops here. So let's just see what happens. That was a short, okay? Now at this point, it's, oh, this is wonderful, having a great time. VPOC migration. And I start having those words that we all utter. because the trade was, it's called the IBF, IB failure. I took it from here. Why? Because of that. Where am I trying to go? Here. Here. This is my target for that short. And that would be pretty good. What do you think? 40, whatever, 30-point trade. That's what I'm trading for. 20, 30s. I don't need a lot of them, right? And I will take stops here and there, but they're not substantial relative to the rotations I attempt to trade. And I also try to trade in the stops because the market needs sellers. Well, who are the sellers here? Well, if I have longs in this leg back here, they become the sellers. So this is my, and where am I trying to go? I'm trying to come all the way down. And, but now let's look at the auction. Too high, IBF, break down, over here now. We're over in this one. And come outside. Outside edge is here. And if I can break down, I can come down further. Doesn't. Now, as soon as I come back here, this is mean reversion. From here to here is the same as this to this. That's called mean reversion. So this trade, when this happens here, there's trouble. And where's my stops? There. You always write this down, guys. You got to look left. This chop here, the buyers were there. When I put these trades on, I'm also looking under the swings because retail traders, you and me, we are risk adverse and we trail stops. Very logical, right? Well, if I get a short and there's a trigger, there's the test. Now, where am I going? Into the stops. Those are my sellers. Now, I might have new sellers up here. I don't know. Me, yes, but it might only be counter rotation because the trend is up, right? Maybe. So for me, if I'm taking these trades, I'm looking at where's the stops, where's the stops, where's the stops, and to come down. So I know at any level where I get in the stops that I can have a reaction and go the other way. This now is VPOC migration. This is now the fair price. So I know now that I can do this. And I don't know if it will, not blessed with clairvoyance. I've sent the coupons in, but haven't gotten anything back. Liquidity comes in the book. Now, this liquidity here is in, and we break below it. So this is resistance. It's also a high volume node, which is also like a retail price. Right here, I break high. That's my resistance. Where's my support? It's there and here. Let's look at the structure again. You've seen this before. So the sellers are here, going to zero. These guys come in, no clue. Buyers take over here. And where were the sellers? Right there. I'm going to throw a little line on here for you. And this helps you see structure. So I know if this is too high and this now is too low. For the market to go down, I got to get below where the buyers took over. Can you see the logic? And I had this too. So all these, now subject to your plan, you could be out of this trade here and for sure over here if we can't get under here. And then this is called mean reversion. Subject to your plan, this could be a long to here and back to there, or nothing. So if you think the trend is up, you'd only take longs. Or if you're doing what I'm doing, which, again, I have to go and get, think about it, is I'm taking the shorts. You can trade from either side, right? But the current condition of the market is favoring the long. Right? So this is called mean reversion from the long side. What I've been doing is mean reversion from the short side. You can trade both sides, one side, and 85% probability to take out this. So that's where my teeth chatter, because I'm suspecting we can still take this out because of that statistic, not a recommendation. So align with the trend, longs to there, going for that. Counter trend, you see them, right? Questions? I think now I'm going to try to get into real. Oh, there you go. Questions, guys. How we doing? So, yeah, please hit the like button, guys. I hope you're getting something from this. Uh, I'm looking at this myself, of course, and I'm going, the long would be okay, but you can trade either side. I'm just trading one side because of the higher time frame, but I'm also looking that the shorts are still getting squeezed, and I haven't found my sellers. I had huge sellers up here yesterday because of those icebergs and liquidity. So it's going to be important if we come back here, what happens up in here? Are those sellers going to show up again back here? You notice the liquidity is coming back in. So we got to watch this. High probability we test. If we come up here and exhaust again, then I'll be looking again for shorts to come back here and to fall down. If we don't, and we just keep going, then I have to be aware of the fuel that's sitting up here in this target. These are possible locations. So I'm not going to forget that. But I anticipate if we do approach yesterday's high, that you'll see a rotation, counter rotation ahead of it, because traders will take profits. Those who are long will take profits usually ahead of a previous higher low, and then we pull back and then we can push through it. So and then that puts this on the list. So that's basically the story. You guys have questions? It's just one way to skin the enchilada. Please give a like. I hope you're getting something from this. This is the Trader Lab. And again, you have to find what speaks to you in the market and have a vetted trade plan. And then you just follow your plan. All the decisions are made outside of the market. So we're not making it up here. I'm just taking trades that are my trades. And when I come to a location, I anticipate behavior. If I see it, my job's to put the trade on and take the risk and take my stop or get my scale and manage my trade. So if I'm trading the short side, that's fine. And if I'm not aligned with the longs, if I make that decision, then I live with it. And that's that. What this is telling us is that we're accepting these higher prices. So this is on the hip parade. So I can be, for me, even trading counter trend is a very productive day for me. It just doesn't matter. But most traders should be developing with the dominant, should be trading with the dominant side, right? So you don't have to. I just happen to be a fan of mean reversion. And it's not an easiest trade in the world, if there is such a thing, because you're trying to pick edges. And it's very easy. Suppose you do this. Well, you take a stop. And you could be taking stops all the way up. So you really have to know what you're doing. Notice the liquidity. Now, who wants to sell the high of the day? As Dirty Harry would say. Do you feel lucky? Well, I don't pick the high of the day because I don't know where it is. And I know my stops are here. So any trade I take is aggressive and counter trend. So this is not a trade I would necessarily take, okay? But I know where it might go. It might come back here. And here. But it's counter trend. So the better thing is not to trade it. Now, what I do and you do, I'm not you, you're not me. So I might be able to trade this, but I know the better trade is the long side because of that. So if the shorts are being squeezed, I'm actually would be joining the retreating side. So that puts me on the weak side in this time frame, if you will. So the shorts are very aggressive, and seeing that we're over the 75 now, and that this is now the retail price, and we're accepting that upper distribution, shorts are just very aggressive here. So I have no reason to take shorts. I have no reason to take longs. I'm just hanging out. Because you need location. If you don't have, this is like real estate. If you don't have location, you just don't have a trade. In the end, it becomes your trade plan. There are some traders that are very comfortable trading counter trend. I mean, for me, it's just like a walk in the park. But the better locations are the longs until it changes. This is a potential short for me here, but I know I'm on the weak side. So I'm kind of would be trading it, you might say, scared. In other words, scared means aggressive to get risk neutral. You not going, and this might only be where it goes, or it can come out here. So I know that. If this comes out here, I have a trade that's a potential long, not a recommendation to come here. So the possibility is if I find too high, I can get these stops coming out, maybe, come back here. This is mean reversion, that's the mean, and then come out here for a long back to here. So my choices are take this high risk to here, looking for that, and it may never come back there, or not take this because the direction is up and use it to come down here to get a line with the long to come there and into the stops. Do you see how that might work? Does that make sense, guys? Hope you're getting something out of this. Please give a like if you're visiting in YouTube. There's our sweep, and we're going for this, right? So that's why nada. Hey, this is very interesting. We got to watch this behavior up in here. Remember what happened yesterday? 3,000 icebergs, a wall of liquidity. We want to watch this area. So what I'm anticipating is a squeeze here, and then we've got to see the behavior, okay? So I don't have a trade. That's why my teeth are chattering, right? Because of this. So the possibility is to come here, rotate, and then blow through, or just blow through. That's the possibility. So we want to watch here. There's some light iceberg selling. Nothing heavy duty. We have a sweep here, which suggests potential counter rotation, but we have the stops. The shorts are getting squeezed. So I have no short up in here now. I'm just going to sit. I hope that makes some sense, and I hope you're getting something out of this. Please give a like. By the way, if you want to visit the Trader Lab, there's a link in the bottom of YouTube. It's a community of like-minded traders who've come together to leverage their collective experience. It doesn't matter how long you've been trading. This is about trade plans, vetting trades, so you only get involved where you have a statistical edge, understanding the psychological aspects of this business and what it does, and in spite of your intention, losing control because of the emotional stimulus. You need to learn about that, how it interferes and takes over. FOMO and clicking the mouse and chasing the market and having to make back what you lost. All those things that go through your head, I can assure you, they don't go through the heads of the dealer in the casino. They just deal the next hand, take the next trade, if you will, play the next game. So that's our business. But how can you not be emotionally detached from the outcome of any specific trade? You can't. Yet, you need to become and detach yourself and accept it more as a random distribution of outcomes like the casinos do, instead of making it up on the fly. I always say, you got to know what you're going to do before it happens. So I know what I'm going to do. I don't know what the market will do. If I can figure that part out, things will be golden. But I do know, though, based on my plan that I have an edge. Even if I'm fading this, I know where to trade. And I'm not saying that developing traders ought to be fading this, but more experienced traders can be trading, can be fading. But now that I'm here, I have no trade. I'm just, going to wait, because depending on where I come over here, it might still be a short back to here. So, and that might be completely out of whack because it's counter trend. So I have to be very patient. And if I don't get another trade and this thing goes all the way up here and I'm totally out of whack and out of alignment, then I just don't have a trade. Or I take a stop and I go, okay, I just have to, that's what I have to do. For me, it's just plan. It's not prediction. I can't predict anything. I do know probability, and I know this has a high probability. So stepping in front of this is not a good plan. Getting it taken out and seeing what happens at this level, because it's an important level, that is important. And I'm going to be observing this behavior. And we have the possibility of this too, right? You guys have questions? I'll post them. Thanks for visiting Trader Lab, guys. By the way, if you want to visit the Trader Lab, there's a link in the bottom of YouTube. And there is no cost for you to visit Trader Lab, become part of the community. It's a serious community. There's no holy grail. There's none of this. The secret sauce, you see that all day, probably Instagram, TikTok, and wherever you're going, out in YouTube. There's no larger group of nonsense than that. The business of trading is just a business. It's a model. It's a gaming model. It's random, and the idea is with a vetted trade plan, and that's the work, by the way. All the decisions are made outside of this. So you don't make it up. What should I do here? For me, I don't do anything. Where's my next area to observe? The stops up here. And what happens here? I preferably wanted to get through here and get the shorts out. And then I have to see, do we get more initiative buyers or do we exhaust after the shorts are out? Remember how the market works. The market goes up to go down. The market goes down to go up. So we went down yesterday and now we're going up. Market goes down to go up. The market goes up to go down. The market goes maybe down, maybe not, to go up to here. And we already got the stops here. The next stops are here and there. And I'm still under this key level. So now if we get through all of this, then that's on the hit parade. So we'll see. We're approaching yesterday's high. So that's the basis of why I was taking shorts. Looking for the gap, to come back into here. So we didn't do it. Now, it doesn't mean we won't do it later today or never, and we might do it tomorrow. Nobody knows. It's not my job. So I just sort of, go with it. I go with the flow. Now, we have to be aware of this. We're outside the first hour's high. This is our next target. Remember, looking for selling ahead of this for the rotation. This is profit taking most likely in front of this. If I was long, I'd be getting profits ahead of this high. That's what you're seeing. So I would not fade it. I'd be looking for it to come out. Now, if it doesn't, then it goes down to zero from here. I will find another way in. I have another trade, I should say. So I have other trades. But I'm looking for the rotation, the push, and then what happens here? And then I have no idea. So for me, if I can come out and come back, then I'm going to be, and this is not a recommendation, I'm going to be looking here. This is very important. So let's watch the behavior. So is it a stampede for new highs, or are we just squeezing and we're going to run out of the buy stops? You can see the stops coming out, right? And we can pop because there's going to be stops above here. Then it's very much what happens in here. And And this is very much not a recommendation because this is very aggressive. If there's a short up here, it's going here. Maybe, because that's the mean. So if I get what's too high, remember how the market works. I'm not paying that. Well, where is it? I don't know where the high is. It's not my job. But if I get a trigger and I have longs in here, then possibly I can come back here. And then if I get under there, then it changes everything. So right now, nothing to do. I'm just giving you a rationale. I'm not saying a short is appropriate. I'm saying is a counter rotation might be appropriate, and that might be the extent of it, or nothing. So I'm just hanging out now. So we want to watch this. If we get through, we want to watch this if we come back below it and check it. I'm just letting you know, this is advanced process. This is something that would come later on in your development if you're in TraderLab. This is the key. So if I come up here, doesn't matter. If I break under here, then I'm looking under here. But it has to go up and then from here. So let's see if it does it. Not a trade recommendation. Anything can happen, right? Are you guys following? Please give a like. And by the way, be sure to review yesterday's stream. It talks about realignment. So in other words, it was longs in the morning. You guys saw that in the stream. And then you saw me narrate live short continuation trades to the short side, right? All the longs who came in the morning got thrown under the bus. Well, now the shorts that are in from yesterday are under the bus. Remember, 55. Now, me, not so much. Am I going to sell 55? No. Why? Stops. So what do I anticipate here? Remember, rotation. This is absorption, light icebergs. Remember, we had 3,500 icebergs go off yesterday. You do make note of that, don't you? If you have order flow, you know that's pretty darn important. Now, what about those 3,500 icebergs? Are those guys going to sell more up here? Or are they going to be missing in action? Are they going to defend this level again? Isn't that interesting? Those are the questions as a trader you would be contemplating, not predicting. What we do know is we have buy stops from the shorts. So this is not a level to sell unless we get exhaustion and we come back under here. And even then, who knows? Nobody knows. That's my plan. Not saying it's a good one. And there's some other considerations here that make this a much more aggressive potential reversion trade. We have a trader in TraderLab named Tapish, and he posts, and he's a great participant, posts a lot of charts and things, and there's a lot of dialogue. By the way, you see we're waiting on this thing. This is like letting a avocado ripen. Let me try to move some things around here if I can. I hope I don't lose Discord. Hold on a second, guys. Let me try to get back here. Okay, this is what, while we're waiting here for this thing to ferment, this is what the Bookmap Discord TraderLab community looks like. There's a lot going on in here. I'm going to thank Bookmap for all the support for the stream. Charts, conversations. Me, I post a lot. I use a voice to text because I also trade full time. So it's kind of hard for me to walk and chew gum. But this is the TraderLab community, and this is what the library of webinars looks like. This is the primer webinar. It's got about 32,000-ish views. It's a high-level overview. It's about an hour. Now, meet the TraderLab. The TraderLab is an advanced trading process. It is different. It's not, you can use your indicators. You can do anything you want. But if you don't understand market mechanics, you won't be able to align. So you won't know the condition of the market and what potential trades have an edge and when certain trades don't. So and most traders with time frames and indicators are kind of using a plug and play, and that somehow it's always going to, apply. Well, in a running market, your indicators might work pretty well, but most of the time it's not running, it's doing this. Well, what do you do? If you're using the same process, that's where your losses are going to show up, even though you do get winners. How do you differentiate? Well, this is where you can learn this. So meet the Trader Lab. And then this one shows you the entire process. In other words, what I'm showing you today in this stream, higher time frame, structured trades, and then the trades. And then there's other ones. I know you guys always ask me for real-time narration. I get it. I do a lot of it when I can. And you guys know right here that there's no short here because of the fuel. Now, if this is the high of the day, it's the high of the day. I don't have a trade. Doesn't matter to me. I do know the location, and so do you. It's possible we're just getting profit taking. And if so, we're going to take this out, and then I'm looking potentially to sell it. And I really want to stress it's counter trend. So do you feel lucky? And that's Dirty Harry, because counter trend has potentially a lower probability than alignment for continuation, right? So you would know that in your trade plan. So I might be taking shorts, but I know that I'm kind of standing against the condition. But I can't take a short until this resolves and I see what happens in here. Just saying. And even then, I may not take it. If this thing explodes up here, I'm just going to go, well, that's interesting, and wait, and maybe not have another trade for the day. If you're interested in the Bookmap Discord Trader Lab community, use the link in the bottom of YouTube. There's no cost for it. And as you can tell, it's a serious community. It's about the business. It's about trade plans. It's about knowing what you're going to do before the market gets there, not predicting, because we don't get that. If the casinos can't figure out what's going to happen with any specific hand they deal, we're not going to figure out what's going to happen on any specific trade. So, and all the planning is not done here. If you're going, should I get in? Should I get out? What should I do? Where does this trade fail? You don't have a trade plan. Don't trade. Spend your time preserving your equity for when you have an edge. Then you trade your edge. You only need one edge. And then it's proof of concept. Build a template, a foundational piece of a structured trade that you can reverse engineer and know that when a certain condition shows up, you put the trade on. You got to have a trigger. You got to know where it fails, where your stop goes. You got to know where the buyers were active before. And you got to know that if we come down here, we might get these buyers right there. And if you took a short, this is where your scale has to be, because our buyer, you see what happened here? Our buyers took control. These sellers got absorbed. The buyers are there, and we broke here. So this is your micro support. So there's no trade. I do know the levels. That's the auction. What do I know? Out here, too low. 55 is the big kahuna. Let's take it out already. And there's sellers sitting here, same as yesterday. Now, we don't know, because it's an iceberg, what's going to happen. They don't show in the order book. But let me show you something that was here yesterday. I pointed this out in Trader Lab. You see this? This is the limit order book. There's about 450 sitting in there. And that's what's showing. Icebergs don't show here. The tip of the iceberg shows, but they pay to have an iceberg order, so they don't show. So there's 450 showing. What else is up there? Remember what happened yesterday? 3,000 or so icebergs went here. This is important. So look what's going on here. Now, I don't have a sell. What do I have? Pop, sell, if it sets up. So I have no trade. But I want you to see a method. And if it doesn't qualify, I don't have a trade, right? I have nothing to do. Where's my support? Buyers are here. The breakout is there. Buyers absorbed these sellers. So buyers are here. Buyers are here. breakout is there, support is there, trade fails really under here or under here. We picked our stops, and now where's resistance? It's there, there. So nothing to do, okay? For me, it's got to get through here. Now, it's probably not what you're looking to see by visiting the stream, but this is just trading. I don't know, just what I do. And it doesn't mean it's a good plan. I'm sure there's other plans that are much better than mine. Trader Lab, a lot of the Trader Lab was long. And they were looking at me, and I'm mentioning I'm doing mean reversion, and they're going, I can sure that they're kind of scratching their heads. Why would he be short when he should be long? And the thing is, I can pick any side to trade, and I was looking for the squeeze. 75 was really the level that I kind of thought was, this was the key area for me. It's now the fair price. That puts this on the hit parade. So I can't sell it, and I'm not going to buy it here. I'm just going to wait. And you guys may say, well, Tom, you could have bought it here. You could sell it there. I don't trade for this range, I'm trading for much larger ranges because I know if I come out here and fail, I've got a long way to go. But I need it to come out, so I have nothing. So I just sit back. It doesn't matter. I know that's probably you're looking for something a little more action-oriented, but this is a business of patience. It's not a business of action. By the way, if you're interested in Trader Lab, you can use my battery is low. You can use the link in the bottom of YouTube. You will need to verify your Discord email, so we know, there's no spam or phishing, which we're trying to always keep the quality of the Bookmap community the best it can be. So there's no debris in there. And then starting this weekend, if you're not verified, you won't have access to any of the chats or anything, any of the additional education. And by the way, you don't have to be a Bookmap subscriber. If you're using Bookmap Toss or you don't have Bookmap at all, you'll see there's a link in here where you could just register for free. Get verified. If you already have verified and you're in the Bookmap ecosystem, it's also an ecosystem, but an ecosystem, you don't have to do anything if you're already verified. But if you're not verified and you're in the Bookmap Discord server, you need to do that. And you just the email that's associated with your software license key is what you would use. Same thing if you're new and you want to visit and join and become part of the Bookmap community. Remember, if you want to visit Trader Lab, it's about the business of trading. This is very interesting. It's like a tease, isn't it? This is a location. It's an outside edge of this distribution. I can't take this short. Doesn't matter what happens here. And it can very well come down here. We all know that there's stops here. And we all know that if the market's going up, if you were short, what would you do? Might you use counter rotations to cover? And here's another little piece. Do you see this? What did we do here? Broke, test, up. What's here? Test, rotate to where? Here. What is this? Mean reversion to where? To the high volume. High volume is there and there. So resistance in the microstructure is the low volume node, which is this, which is under this. See this? So this is like micro. I'm not a scalper, so I don't, I use, these are triggers, but they're not trades, they're triggers. So when I see a trigger, I can anticipate behavior. This is a trigger here. So I've got long side from here, short side from there, and nothing to do. Now, if I want to take longs to take this out, that's possible. But I also have the risk of it failing here because of all the selling I had yesterday. So for me, I got to get the stops, and then I'll see what happens. That's my story. I'm sticking to it. Hope you guys are getting something out of this. Rod, are you long? We have a trader in Trader Lab. He kind of sits in a Barca lounger and trades. He trades larger swings. I pretty much do the same thing, but for me, the shorter rotations are to get risk neutral. So, and I find that since I probe the market and like all of us, we take stops. Um, in this volatility with the ranges we have, it's really a good environment um, from a risk reward point of view. And if it gets really nutty, I do either drop size or increase stops. But because the rotations are larger, it's still, these ratios work well. But you have to know what you're going to do. And if you're a developing trader and the volatility and the tweets and all this, unsettle you, which is normal, drop size down, because, and always use stops and understand that if there's an explosive tweet or somebody falls over the court at the CME, that things can get nasty and your stop does not limit your loss because it becomes a market order. And if everybody pulls, out of the passive side of the book says, we're out of here, then you're going to have to wait till there's somebody to take your trade. So that's where skidding comes in. So that's why stops, are a nice suggestion. So always use a stop and don't over leverage. This is about sustainability, not gambling. And I'm not saying you can't gamble, but I always say go to casino, get the ticket to the buffet. This is important here, right here. This is a sell sweep. This is a sweep. This is resistance becomes support. You see it? You see it? Sell sweep suggests upside rotation. If I was trading long mean reversion, which I'm not, this is a long and the mean, it's very tight. So if you're going to operate in this, you got to get risk neutral and you're going for this. These are longs and I wouldn't take them. Because now this is where we're trying to go. So I'm more inclined, and you guys probably wonder why, to come out here, see my sellers, and then come back this way to here. So that's my next trade. But I have to caution anyone that these are not recommendations. Doesn't matter. I mean, if this comes up here and I fade it and it gives me a little hiccup, it has to come back below here. Okay. So if it comes here and just keeps going, then I'm just going to not do anything. And this is all based on the higher time frame. So this is the next target, and then whatever, this is the key. Okay. So we'll see what it does. Please give a like. I'm running out of time. These streams are available to review. Plus, there's the library of webinars in the Trader Lab, and you're all welcome to visit that. Be sure to get verified. Use your email that's registered with Bookmap that's associated with your key. You need to be verified to have access to all the streamers and advanced education, order flow, stocks, options, crypto, algorithmic behavior, market maker behavior, swing trading, and a lot more. Also, if you're using TOS Bookmap or you're not registered with Bookmap, you can just register. It's free and it's or use the QR code. But if you haven't verified, you will lose access to all the goodies in the Bookmap server. And remember, Bookmap does contests, free subscriptions, all kinds of fun things. I think that's pretty cool, and it might be something you might want to check out. Don't forget to like, and let's keep an eye here. Well, the counter trend trading, so you guys understand, is not where you start. The counter trend is more, put it this way, you never have to take a counter trend trade in your life. If you align with the advancing side, statistically, you have a better probability than fading it, okay? So I would say 90% of the time I trade in alignment, but I can also trade the other side. Part of what's doing that for me is that the market, remember the concept, the market goes up to go down, the market goes down to go up. And what did it do yesterday? It went up to go down. What's it doing today? It went down, now it's going up. If it goes up, is it now to go down? Now here's our location. There's our stops, 456. There's our liquidity. Let's watch. Looks like these guys pulled. Let's watch and see if we get a iceberg behavior, and we want to watch this. This is very important now. Okay? Nothing to do. We're just tourists, right? So this is an 85% probability. The volume point of control is above the IB. That's an important consideration. This sets up the potential for a new high a day. It's a statistic in the Trader Lab. Thank you, Rod, for that. Now, this is the key level. So right here, we have a sweep, and we want to see what happens here. So now I'm just hanging out. So we're going to see now. And there's no way to predict anything, no way to know, nada, zippo. This is my location to observe. And if it just keeps going, it just keeps going, then I don't have anything to do. Now, I am doing reversion trading today, not alignment trading. It puts me in a different plan. And it's, again, most traders in Trader Lab should be on the long side. I'm running out of time. I got 2 minutes. You guys can watch this. I'm just going to say is, and this is specifically not a recommendation. I can't make trade recommendations because I take stops. And you might as well take your own stops. You don't need to take mine, right? I take them. So this is where I'm going to be watching for potential behavior. And I want to see what happens up here. Do I exhaust and fall back in? Because I've met my all my statistical probabilities. And so I want to see this. So this is the location. If I can get back into yesterday's range, then I'm looking to come back inside. If I can't, then I can continue squeezing, and I've got nothing to do. My next level of stops is up here. We could get there, but until we do, we haven't. And now this. So that's my level for potential activity. You guys keep an eye on it. It's not a recommendation. Visit the Trader Lab. Use the link in the bottom of YouTube. It's a terrific community. Download the 60 PDFs of structured trades. Reverse engineer them. You only need one to develop an edge, and then develop the emotional stability and discipline to execute it. And then you know what you're going to do before the trade shows up because you already have a plan. That's the business of trading. If you want to learn more about that, use the link in the bottom of YouTube, and be sure to verify your email address so we know you're not a bot and that kind of thing in Discord. And remember, you need to do that before this weekend if you want to have access to the Trader Lab and all the other additional education that's available at no cost. Thanks again, guys. Have a great day, and thanks so much for visiting the Trader Lab.